Good afternoon, all of you. Yeah, before we get into the topic, I would like to ask you one simple question. How many sides does a coin have? Very simple question, right? Three. Perfect, right? So, from a GST perspective, what are those three areas? So, we all talked about compliances, we talked about litigation, and what is the other area which is missing for us? So, the three sides of the coin, if you see, right? The one which is there between the two sides, that is only the compliance area. So are we content with that small amount of money what we have in our bank account? Or you want to have a wider exposure? So one is litigation, that is if you are a practitioner, and if you are a professional on the board as a CFO or a key CXO category or as an independent director in any company, that has more responsibility to do with the indirect taxes basically. My whole organization's tax strategy will determine my profitability, my brand, my market valuation, and it will also help me to get into the IPO. Now, when we have such a wide spectrum, the third side is missing actually. The second side, litigation also. Now, when I do compliances, the major challenge is I need to follow up with the clients to get the data. I need to see the data. I need to burn out midnight oil. Many a times my 11th, 20th, all these due dates happen during weekends or festival days. And what is there I am getting end of the day? Peanuts. Are we here to earn peanuts? After struggling and qualifying the examinations of CMA? No, right? So we should migrate, as Mrityunjay has rightly said, transition. I know change is constant, at the same time it is tough, but we need to transform ourselves. Until unless we don't transform, the theme of this NCMAC is not at all possible, that is corporate excellence. Now coming to this here, since the time given is very less, I would like to talk about only very important topics. Now, this is one area which everyone should be able to do these things. As a students in the industry or in practice, we always talk about make or buy decisions based on my marginal cost, contributions and all those things. That is till 1st July 2017. But after 1st July 2017, we have GST in place. And if you see the Indian economy, which started as an agrarian economy when we got independence, then we transformed to a manufacturing industrial, and now we are into the services. Now when it comes to the services, there is lot of scope when we do the cost audits. Value addition can be shown there. From a GST perspective also, do I really need to invest on that asset? Or when I should make an investment in that asset? This will have an impact on my working capital, on my profitability, which will have an impact on my market capitalization when I go for listings. Now let us take an example in the infrastructure industry, which is purely drawn by the public sector or the government tenders, and realizations take lot of time. Should I go and invest in heavy earth moving equipment? Yes, I do get my input tax credit compared to the previous era. But what is the cost of input tax credit vis-a-vis the other things I need to do? Who can do that job other than we? We can do the cost benefit analysis. So one quick question I would like to ask you all. How many of you have done strategic thinking doing cost benefit analysis when it comes to the indirect taxation? We know all these topics. What is required is connecting between the dots and reading between the lines. Another industry, we talked about service sector industry. Now, when I am an exporter of services, the provisions clearly laid down that my refund can be obtained only when it is based on input services. Because my definitions of input services and capital goods is very clear in the GST law. Now, if I need to export software services, I need to purchase servers. I need to purchase laptops or desktops for my employees. Now, can I take refund of that while filing my refund application? The provisions are very clear. And when the provisions are very clear, first as a professional, the question asked by the client, when input services are allowed, why not for inputs? Now my inputs or capital goods will have a long lasting impact. Whereas I am claiming it only for a particular period. So that brings the gap between for us. Now if I don't take input tax credit, or if I take input tax credit, what is my impact for me? Now when I take input tax credit, I am not eligible to get a refund of that. It will lie in my balance sheet as a current asset. But what will I do? Until unless I have another line of business with the same registration number, I can cross utilize that. In absence of that, we advise clients go and capitalize it, add it to the asset cost. When I add it to the asset cost, I will not have any impact on my profitability. Depreciation, it is a non-cash expenditure for me. Now, this problem is arising because I am trying to own those laptops or desktops or servers. But if I lease it out, that will become an input service for me. The moment it becomes an input service for me, nothing stops me from claiming refund. That is option A. Now, if I want to go for a listing, normally investors and the analysts will see what is my asset base. When my asset base is right weight, it has another set of challenges from the capital markets perspective and valuations perspective. Now, what I should do in such cases? So, what we suggest at this point of time is you need to do a detailed analysis, export your services with the payment of taxes. When you export your services with the payment of taxes, you can avail input tax credit on your capital goods and inputs and discharge it in GSTR 3B and then file your refund application, which it will be processed. So your cash churning will happen there for you. Your working capital costs will reduce. That will have an impact on your profitability again there. So these are certain key areas what we need to take care. Another important area which I would like to tell here is, now all of you know that input service distributor ISD has become mandatory. Now based on my input services, which I am using it in a common place, has to be a portion based on my turnover to across my locations where I have my GST registrations. This is what we all know. But there are certain industries where I take services, input services, like my SAP licensing fee, or the firewalls which are installed for my servers, or I take any of my softwares as a SaaS platform. Now, those licenses are used by employees across the globe. Now the question arises, should I distribute it based on the turnover to my offices outside India or not? So if I am having licenses from SAP India, should I ask them to give me two sets of invoices? One for the Indian entity another from one of their entities outside India to my country where I am using that. So in that way, I am in line with my provisions. If I don't transfer for the employees who are sitting outside the country or based on the turnover, then my compliances will become an issue for me. So this is one area which we need to be very, very careful. Now when we are touching about the ISD, now any industry today, we cannot survive without branding and marketing, which will always have a cost, and that is always built as a part of my cost, and based on which I determine my price matrix for each product. Now, when I have this branding costs or marketing costs, should I incur it state-wise or should I incur it at my centralized GST registration number? If I do it state-wise, it's very tough for me. One is how much I should invest in each region. Based on the season, my matrix will differ. If I'm doing an advertisement multi-state, like prime time ads in televisions, or if I get my branding done on trains, it runs through multiple states. Based on the distance traveled, I need to take my ITC and all those things will come into picture. So I need to do a cost benefit analysis there, and I need to see where I need to obtain my registration. Or should I go for a centralized registration from where all my marketing and branding expenditure is met? That will help me to apportion based on my turnover. Or else it will create problems like accumulation of ITs in one particular state. In another state, you need to fork out in cash to pay, discharge your tax liabilities. Again, that will have an impact on your working capital. So any strategy or any decision which I take, I need to visit from taxation perspective also. And we all know that today many of us have received notices between the differences in 2A and 3B, 2B and 3B, 3B and 9. All these are arithmetical notices and differences. When it comes there, should I really stick to that? Or can I have a strategy in the organization where these differences does not arise for me? Yes, we need to have a strategy which needs to be revisited every now and then. What should be my strategy? I should go at the time of my vendor onboarding. I should see the tax compliances history of my vendor. He may be the best in quality, but he is not at all tax compliant. What will happen to me? Since he does not file his return on time, my ITC is blocked. 18% impact on my working capital. Now in this case, what should be my strategy? He is the best guy or he is the only guy in the market? It becomes our responsibility to handhold such persons or taxpayers, because these are predominantly from the MSME sector. Now your payment terms plays a key role for the MSME sector or with your vendors. We can have a strategy. The moment I get my invoice, it is approved, it reaches finance, release the tax component, ensure that the tax is discharged by him, and before releasing the differential amount, verify his 3B filing and verify it has been there also in his 2B or not. Today you have a validation between your 1 and 3B and the ITC being claimed between 2B and 3B. In the past years, we never had these validations. So people merely file the GSTR 1. Since payment is not made, it has been disallowed for us. So all this litigation process we are going through there. So this is the strategy we should bring in. Then only it can lead to corporate excellence. Now we also talked about asset light strategy. If it is asset light strategy, it sounds good for me. But when I want to aspire and go towards the listings, that becomes a challenge for me. I need to do a detailed cost benefit analysis whether I should be owning the assets or doing these things. Another important thing here is and one of which point I want to touch base here is on your due diligence framework. We talked about vendor onboarding. Should I stop at my vendor onboarding time only or should I do at regular intervals? That is also very important for us. So today GST is using technology a lot. You have APIs, you have third-party service providers. You can use their APIs, validate the GST registration status at the time of placing the order, at the time of receiving the goods, or the time of releasing the payments. This will help you to do a lot. Now, this you are seeing it only from the recipient point of view. Now, what about my banking and NBFC sector basically? Do they have any impact of GST on them? The answer is yes. Now, nobody gives us loans free of cost, right? The asset has to be mortgaged with them. Now, the asset which is being mortgaged, is it done in a distress or not? Because we have provisions under GST Act, especially when you go through your section 81, which clearly says that if any asset has been transferred or a lien is created, in certain cases, department has the first right in such cases actually. It can revoke that. As a lender, I take the mortgage and department comes to know that the borrower has defaulted the tax liabilities and department can take over that lien. That means you are giving a loan without any proper security for that. And if it defaults, your NPAs increase. When NPAs increase, it has an impact on your profitability. It has an impact on your market capitalization. So these are the areas which we need to take care. And now, how many of us have really seen GST can be used in marketing also? I came across two cases, which two of my clients basically. In the initial days, we had this anti-profiteering provisions. So which clearly lays down that if you have additional input tax credit benefit vis-a-vis with your existing tax structure or reduction in tax rate, that has to be passed on to the taxpayer. Everybody is aware of it. Now, did companies really take advantage of that or not? In one of the cases, a confectionery company, what they have done is, they have done the cost benefit analysis because of the change in the rate structure and ITC, and smartly what they have done is, on their packaging, they introduced a red sticker with percentage of reduction in the price. Automatically it became a hit in the supermarkets. The reason is the competitors have not reduced the price, whereas this guy has reduced the price. Human tendency, right? Price has reduced. That's where the brand loyalty shifts. Once the brand loyalty shifts, it becomes very tough to bring back that customer. Again, I need to invest tons of money to buy that loyalty from the customer. So that is one classic example which I tell. Another case, medical devices. So medical devices, by default, many taxpayers treat it as electrical equipment. So this here I'm coming from a classification perspective, from a GST perspective, but the profitability and market share impact is here basically for us. Now when everybody in the market were charging for certain set of devices at 18%. This guy comes back to me and says that, is there any possibility that I can reduce the classification? Based on the classification only, my tax rate has to be reduced. So we gave a legal opinion. We said that medical devices are governed by certain government norms, and once you have a certification, it will be treated as a medical device. The moment it is turned out to be a medical device, the tax rate has come down from 18% to 12%. That's where my price is becoming competitive in the market. I'm not doing anything. I've not spent extra penny on my branding or marketing. I'm only leveraging the provisions and interpretations of the GST here. And the received notices from the enforcement agencies, because everybody is doing at 18%, how can you do at 12%? We fought the case with the enforcement agencies, and the client is also very happy. So, as a CMA, whether you're in practice or you're holding any CX category position or whatever is the position, you need to optimize the tax benefits to achieve ultimate corporate excellence that will help us to grow in the long run. I know I have to skip out certain points because of the paucity of time. The presentation is with the organizers and they'll share it with you all. And happy to take the questions after the other speaker session is done. Thanks a lot for your patience hearing.